Okay, so we are going to work through a problem. This is a bank reconciliation problem. So we're going to look at exercise 6-9. All right. And this is our first, this is the demo problem for a bank reconciliation. So the problem gives us Delgato Clinic deposits all cash receipts on the day when they are received, and it makes all cash payments by check. At the close of business on June 30th, 2017, its cash account shows $11,589. $11,589 debit balance. Delgado Clinic's June 30th bank statement shows $10,555 on deposit in the bank. Compare the bank reconciliation for Delgado Clinic using the following information. Okay, so we've got some transaction data. Before we start to sort through that, let's set up the bank reconciliation. All right. Okay, so this one is for June, and typically bank recs would be done on a monthly basis. All right, every month, and that's part of a strong system of internal controls. And it is done in two phases, as you may recall from the lecture. The first phase being starting with the bank statement balance. All right, you give this to an opportunity to check since it's slow at the moment. So we'll start with the bank statement balance. And then we'll also have book balance. All right, and of course the book balance is the balance from the accounting records. We're going to plug what we know as the balances in thus far. All right. So bank statement balance is given. It's right here. 1055. Or I should say $10,555. Bank statement balance, or I should say balance per accounting records are per books, 11,589. All right. And so for both, we're going to have some additions. All right. And then we will also have deductions, or just subtractions. All right. Okay. So now that we've got this set up, let's look at the transaction data. All right. Outstanding checks as of June 30th total $1,829. Okay. What is an outstanding check? It's a check that's written, and as checks are written, you deduct them from the bank balance. So from the book balance. So the 1829 is already reflected in this number. All right. But they haven't been cashed yet. All right. So they're not reflected in the bank balance. All right. Which means we are going to deduct that number from the bank statement balance. Okay. Let's continue. So the next, it says June 30th bank statement. List a $16 bank service charge. All right. So banks don't necessarily tell you when they're going to charge you for a service. They've already got your money, so they just take it from the account. And so that means we need to deduct it from the book balance because it hasn't yet been recorded. All right. Check number 919 listed with the canceled checks was correctly drawn for $467 in payment of a utility bill on June 15. Delgato Clinic mistakenly recorded it with a debit to utilities expense and a credit to cash in the same amount. Okay. Now, you may recall in the lecture, I said that errors you really kind of have to read to figure out what needs adjusting. Now, what happens here, or what happened here, is that the check was correctly made out for $467. All right, but the accounting department recorded it for the wrong amount. All right. This would be harder to do with automated systems, but in a manual system, this theoretically could happen. So the journal entry it gives you the journal entry. Debit to utilities expense, credit to cash in the amount of $476. Well, that's $9 too high. The difference between $476 and $467. All right, and you reduced cash $9 too much. So we're going to add that back to cancel out that error. All right. All right. So that's how we get to that. And after we make this entry, the net of the original transaction described here and the number adjustment leaves you with $467, which was the correct amount. All right. Now, of the things you're asked to place on the bank reconciliation, errors are obviously the most difficult because technically banks can make errors as well. Not technically, they do make mistakes. So you may see some of those in the work as well. Bank errors. All right. Let's go on to transaction D. June 30th cash receipts of $2,086. $856 were placed in the bank's night depository after banking hours and not recorded on the June 30th bank statement. All right. Well, that's the textbook definition of a deposit in transit. All right. It was deposited after the close of business on June 30th. So we're going to add that to the bank statement balance. All right. So we've journalized transactions A through D, and it works out that we have one of each addition and deduction in each column. If we had multiples, we might do subtotals, but since we only have one, we'll skip subtotals. And the next step is adjusted, and actually we'll just call this adjusted balance. Alright, and if we've done this right, these will agree. So what we're doing, bank statement balance plus the additions less the deductions. Alright. We'll do the same here. Book balance plus the addition less the deduction. Alright, and so they do agree. That means we're done. Right? If I give you a full-length bank reconciliation to do and it doesn't agree, it means you're not done. Right? You missed something somewhere. We didn't. That's all exercise 6.9 is asking you to do. We're going to roll into 6.10. And the reality is that anytime you have an addition or a deduction, the book balance, those are unrecorded transactions. So all 6-10 is asking us to do is to record the journal entries that were previously unrecorded. All right, so we'll do that. I'll actually drop it down below so we can see that. All right. Now, the good thing about making journal entries is you already have half the journal entry, because if it's an addition to cash, you're debiting cash. If it's a deduction from cash, you're crediting cash. All right. So, let's make the first journal entry. All right, and these would be made as part of the month-end adjusting entries. I told you that if you have an addition, you're debiting cash, and you can take that to the bank. All right. So your debit, $9. And the credit we have to give some thought to, right? Because transaction C told us it was for a utilities expense, and it was overstated. You recorded $9 too much initially as a mistake, so we're going to credit that expense, and doing so gets us to the correct amount. All right, that's the first. The next entry, bank service charge. All right, and in the interest of consistency, we'll go with what Connect will have you do, and we'll call this a miscellaneous expense. And of course, the credit has to be cash. 16. All right, and that's all we need to do in exercise 6-10. So There you have it. Quick demonstration of bank reconciliation and the journal entries that result from the bank reconciliation. All right. So next time.